folks, I have seen some nasty markets the past 14 years, and I gotta say, this is one of the most insane markets I've ever seen. One of the nastiest markets I've ever seen. We got a lot to go through in this video here today, folks. Yeah, a lot to show you. I got a lot prepped here. So it starts last night. I was looking at the European markets, and it's amazing to see how fast these markets have fallen and how fast, I mean, it's nothing short of extraordinary how quickly these markets have really fallen. You know, if we go back just about a month ago or so, the DAX was over 16,000, and here today it's 12,000 and some change. And if you go back, I mean, the DAX was higher than this back in 2018. Like 2017 even, the DAX was higher than this. That sort of fall in a major European index is crazy, just absolutely epic move there. Look at the FTSE 100. So this is an index that's 6,000 and some change here today. And if you go back to 2019, 2018, even 2017, this index was actually far exceeding where it is at today. Which you think about this for a moment, and you think about companies' profitability and what's happened over the years, and you think about all the money that's been flushed out there from all the different central banks, right? And all the big banks around the world. And you think about all that, and to see the FTSE here down versus where it was years ago is, a pretty extraordinary moment we're in the market right now, because it's not usual when you can look back at an index and it's down versus where it was several years ago, especially for major ones, let's say in America or in Europe, right? So I'm usually so caught up into what's going on in the United States with the United States indexes, with the United States stocks, that I don't really even get over to Europe very often. So that was I just want to show you guys that to show you how bad it's really been in Europe so far, okay? Now, look at this, volatility index, the VIX. We're at 35 plus now. So I pulled up a chart for basically the last 30 years or so. And the VIX is usually between 15 and 25. Today we're over 35 on the VIX, and it's very rare you get these sorts of moments that the VIX goes over 35. Now what I can say is every single time ever the VIX goes over 30 and especially over 35, it's a huge buying the dip opportunity. Huge buying opportunity. Now it doesn't mean you're absolutely at a bottom or can't go down over the coming weeks or even the coming months. But what I do know is every single time you buy stocks when the VIX is well over 30, or especially when it's over 35 specifically, that is a time to be buying stocks. And that means there's a ton of fear in the market. A lot of people are scared, and you need to be out there buying stocks. Even though I know it's scary and there's so much bad stuff going on, and there's so much being thrown at the market, at the end of the day, it never fails. It never fails. Every single time the VIX goes over 35, it's a huge buying the dip opportunity. And you can either choose to do it or you can choose not to do it. But you kind of either got to play either side, right? Look at this. So the Hong Kong stock market, the Hang Seng Index, is now lower. And I know a lot of us never even pay attention to Asian markets, right? Look at this. It's now lower than where it was years ago. Years ago. I mean, look at this. That's crazy. The Hong Kong stock market about 21,000. And, back in 2018, the stock market was 33,000, 30 plus thousand for good chunks of time. I mean, you want to hear something even crazier. The index is lower than it was in March of 2020. When everything was falling off a cliff and we thought the global economy was going to shut down for years and that we were going to lose 5 to 10% of the world's population. Remember that? Remember those days? Yeah, that was a real thought. And the index is lower today than where it was back then. That's crazy, okay? Now, the Moscow index, the Russian stock market index, I don't know when they're going to open back up the Russian stock market. This thing's been closed for a while. And we'll see whenever that baby opens back up. It fell 40% in a matter of a snap of fingers. We'll see whenever they open back up that. But yeah, imagine 40%. I mean, think about it. Usually circuit breakers go off if the American market falls 5% in a day. Imagine the American market falls 40% in a day. Oh my gosh, okay? And it reminds me of this great quote Warren Buffett says, basically. He says, I never attempt to make money in the stock market. I buy on the assumption that they could close the market the next day and not reopen it for 5 years. And that kind of reminds me of, honestly reminds me of the Russian stock market right now, right? And basically what Warren Buffett was saying there, to get a little deeper into that quote, he's basically saying he buys stocks for their profitability that the businesses have, not because the stock price is going to go up over the next month or the next years. He's buying it based upon the cash flows companies can produce over time. Maybe they can pay them out in dividends, and that at the end of the day, that asset will become worth more over time, even if in that given day or month or even year, the stock market's not open during that time. That's basically the point he was making there, which actually I think is a great point. One of hundreds of great Warren Buffett quotes that he's made over time. Okay. Now, crude oil, I got some good news for you guys. Crude chilling out a little bit. Okay. The only good news is it didn't just continue upward and upward and upward. So late last night, crude oil hit 127 and some change. And it's fallen now to about 119, which is still insanely high from where we were just a month ago or so. But the good news is it just isn't on that, up to the sky and hitting 130, hitting 140, hitting 150. And Brent last night hit over 130, Brent crude, which is much more important for the European markets. That hit over 130. But, this is some good news, at least if you want some good news, because right now, the way the market's looking at this is oil spikes higher, market goes down a ton. Oil goes high, market goes down. That's just how it is in the short term. It usually doesn't always work like that. And usually if oil goes up, the stock market goes up and vice versa. If they go down together. But right now we're not in that sort of market. And basically if crude does spike back higher, expect lower indexes. If crude chills out, we could actually get some good news, and the indexes and stocks could actually be in a healthy place. But for right now, that's not the situation. But that crazy upward trajectory has chilled out, and that is good news there. Okay. The Nasdaq, this fall has been pretty epic. Okay, I got to say, this is just a year-to-date chart we're looking at here. We opened the year with the Nasdaq pretty close to 16,000, and now we're under 13,000 now on the Nasdaq index, the Nasdaq 100, and that's a pretty fast fall. I haven't seen the Nasdaq fall like that very often. Very few and far between the 14 years I've been doing this, I've seen the Nasdaq fall that much that fast. I mean, I can think about obviously the Rona crash. That was a scenario where the market fell that fast. December 2018, the Nasdaq fell heavy, but that was over like a period of time. It might have fallen this fast in December 2018. Probably in 2011, when there was a double dip recession fears. I think I remember the Nasdaq falling this fast. Maybe in the summer of 2015, potentially, but I don't even know if the Nasdaq fell that fast then in terms of percentage down. So there's been very few times, and obviously the Great Recession, but that's a whole other situation there. But the moral of the story is very few and far between you see the Nasdaq fall this much, this fast, and lose that big of a percentage that fast. And it's happened here. The chef, it's interesting. The chef has actually held up pretty decent. Given this awful market we're in right now, the chef has actually held up pretty decent. I think that's just because the chef is not nearly as dependent upon Wall Street money and index money, because they're not in any of the indexes as of right now. They're not really in any ETFs for the most part. So, it's just mostly the retail crowd, and we're holding strong. And if anything, we're buying the stock, and I'm waiting for earnings and seeing if it's going to go down at all so I can buy more shares. If it doesn't go down at all, I might still buy more shares. So it's interesting seeing something like the chef actually hold up well in this sort of market that everything's just getting absolutely obliterated. Corsair Gaming is even a better example of this. This stock's up. Yeah, not only is it not down on this awful day of the market, it's up 1.7%. And you pull up a 1 month of this, and it's actually held really good, while almost everything else has been devastated, including even like those safety stocks have been absolutely obliterated. So it just goes to show you how crazy the market can really be when you see a stock like Corsair Gaming, a small cap, do actually pretty darn well in this sort of market, and while everything else is getting absolutely devastated in banks and big tech and everything out there, right? Speaking about devastation, Wynn Resorts. Oh gosh, this stock hit 72 here today. When it comes to Wynn Resorts, everybody's looking at those oil prices. Everybody's thinking about fuel costs going up massively. Everybody's thinking about gasoline costs going up massively. And people are saying, you know what? Could this slow down Vegas? Vegas has been the only thing that's held Wynn together over the past basically 2 years, because Macau has been so limited by, basically the Chinese government hasn't, even though Macau is kind of its own region, it's still so heavily influenced by the Chinese government, and they really haven't had borders open the way you would think they would have them open. And so, basically Las Vegas has saved Wynn, which is crazy to think about, because usually Las Vegas was kind of like, like the loser properties for Wynn, and Macau was like the shining light. And for the past 2 years, it's been the opposite. But now people are worried, like, well, if gas prices continue to go up, are people going to cancel Vegas trips, right? For Wynn, it's not nearly as dependent upon the mass market consumer. Wynn makes their money off people that have millions of dollars, and those people don't really care if gas is $4 a gallon or $5 a gallon or $6 a gallon. They don't care if a plane ticket, if they even are flying on a regular plane, not flying private. They don't really care if they have to pay an extra $500 for a seat or $400 or $600. Doesn't really hit those type of people. So Wynn's not a business that is as affected as many others out there. But when you have recession fears crop up because gas costs are going up so much, and because, basically everybody's getting hit at the pump, and that's going to cause a stock like Wynn to fall, because, a company like Wynn doesn't do good in a recession. That is something we do know, right? Tapestry, big business in Europe. And look at this. Basically, since, it's just, wow. Since a battle broke out, the stock fell from the 40s to now it's at 32 here today. Big European business for Tapestry. Obviously, huge United States business as well. But that one's just been, look at that. In a matter of days, from almost 42 to 32. Oh, that's just vicious. Tapestry is a great company, by the way, and has a bright future. But right now, none of that matters in this sort of market. Voyager Digital, this makes no sense. Voyager Digital, I'm not even, you guys know, I'm certainly not the biggest crypto bull or anything like that. But gosh, there's an opportunity in Voyager Digital. Stock is $6 here today. This one has already been getting absolutely devastated from about $10 to $6. I think the main reason is because it's an OTC stock, but this is actually a big player in the crypto space. They're a force to be reckoned with. They're a massive crypto brokerage. They're usually top 50 in the App Store and in all financial apps in general. And their actually cash flows have been pretty darn impressive, especially in terms of the profitability of this business model. So early days in their business model, the revenue growth has been ridiculous for this company. And so, but the stock price is just getting absolutely obliterated right now. And, either somebody knows something or the market is just completely mispricing this. But in this sort of market, let's be honest, no one wants to own an OTC stock. Even if you are a big name in the crypto space, no one wants to own that sort of stock in this sort of market right now. Things could easily flip the other way, but that's just the way it is in the market we're in right now. Even PayPal, if I showed you Voyager there, even PayPal, people don't want to own PayPal right now. Look at this. This stock has lost 50% plus in 3 months. For PayPal, what would usually be considered, like PayPal would usually be considered one of the safest stocks in the stock market. Great balance sheet, great net income story, great revenue story, diversified business, because they not only own PayPal, but they also own Venmo, which are the two biggest players in the entire financial category in general, right? This would be seen as one of the safer plays in the market. And it has lost over 50% in 3 months. 50% plus in 3 months for PayPal. Crazy. And this stock is so undervalued, I don't even know where to start with this stock. But the craziest thing with PayPal doesn't mean it can't continue to fall even more, as crazy as that sounds, just for the mere fact that if people don't want to take any risks, they're not going to buy PayPal. And the stock has shown basically no support anywhere. It just continues to fall and fall and fall. And so, hit new 52-week low after new 52-week. PayPal, it's not just about 52-week lows. It's about multi-year lows for the stock. And so, it's just, that's the environment we're in right now. That's the environment we're in. Look at Meta. Usually would be considered another one of those safer stocks in the stock market you possibly buy. Balance sheet's a beast. We're talking about, usually they have between 40 and $60 billion of cash just sitting on their balance sheet, right? Their business is a profit machine, a cash cow machine. Diversified business because they own Facebook, they own Facebook Messenger, they own Oculus, which is the number one player in VR, obviously. They own Instagram, they own WhatsApp. It doesn't get much better than this from just a diversified beast business with a great balance sheet, great cash flows and everything like that, but it doesn't matter. Stock's lost over 40% plus in 3 months. 3 months. And it's like, where's the bottom for this? It's at multi-year lows now. I was a point that I didn't think we'd ever see, this stock under $200 again. And, never say never in the stock market. I mean, it's amazing. The fact that this stock is under $200 today is just mind-blowing to me. Mind-blowing to me. Amazon, you want to talk about mind-blowing? This stock is now back to June of 2020 pricing. Back to June of 2020 pricing. Wow, okay, wow is all I got to say. No, Amazon's going to get absolutely eaten alive by fuel costs over the next couple quarters, let's just put it that way. So that could likely hurt their EPS, but Amazon's got a lot of tricks up their sleeve, okay? And they're a beast business model, so don't ever doubt them too much. But I will say it's a great opportunity for long-term investors in this stock because fuel costs won't remain insane forever. I can tell you that. And Amazon getting it back at June 2020 pricing is pretty darn attractive. So that one is that one's that. Shopify, Shopify. You go back a few months ago, the stock is $1,700 plus. Here today, it's $563, and this is now at a multi-year low. And this is another one of those stocks that it's like, where's the bottom for Shop? And I just don't know. I just don't know where the bottom is for Shop. All I know is no one wants to own high growth companies, right? Which Shopify would fit that category. No one wants to own companies that are either not profitable or make very little profits. In Shopify, if you look at their forward P, they're not a very profitable company compared to what their valuation is. You look at their price to sales ratio, it's not the most attractive. And so with a stock like Shop, it looks like a great long-term buy, and it probably is. But in this sort of market, it's not out of the realm of possibilities to say this stock falls another 50% and goes down to 200 range or 300 range, because this market's just in that sort of stage right now where it's just devastating everything. And I mean, it's a great buy for a long-term opportunity, but in this market, there's no telling where the bottom is, right? GoodRx is a business that basically they save you money on your pharmaceuticals, right? And this stock's $14 here today. It's fallen, like 60% in a matter of a 3-month span. What a crazy move. I got to look into GoodRx. That's such a fall. And I'm thinking about all these recession fears crop up, right? Well, if that's true, and there's a bunch of recession fears, and let's just assume we were to actually go into a real recession, right? Well, then people start thinking about saving money. Well, shoot, GoodRx is a pretty good opportunity there. So I'm gonna have to dig in here, see what's going on there, because that's just a crazy move down. Upwork has lost over 50% plus of its valuation in the past 3 months. People are acting like no one's going to use freelance work anymore, and that's just not accurate at all. And especially in a tight labor environment, somebody like Upwork thrives in that sort of environment. And the interesting thing is they're kind of a hedged business. So even if you were to go in a recession, where let's say companies weren't as profitable, so they couldn't hire out as many people, but they still needed some work done, right, on some things, then they're much more likely to use, freelance work. Because let's say they have somebody that's a salary of, let's say $1,000 a week roughly, and it's $52,000 a year. But they're like, man, we can't get the full use out of that person, but we need like a tenth of that work that person's doing, or maybe 1/5 of that work, right? So let's just, use Upwork or Fiverr or sites like that to get that work done and spend maybe $5,000, $10,000 a year versus that $50,000, right? So obviously Upwork's kind of a hedged business, but man, they're just being devastated right now. And that's just the market we're in right now. Now, you look at the heat map today. It's ugly out there. It's red everywhere. Outside of utilities and energy, just about everything is red in this sort of market. I mean, even the great Apple's down about 2% today, right? Microsoft down over 3%. Google's down about 4%. Nvidia's down 6% plus here today. Qualcomm's down about 7%. Tesla's down almost 4%. Obviously, we spoke about it. Amazon, Amazing's down 5.4%. Disney's down 5%. If you're going to have recession fears, obviously Disney's going to pull down. Intuit's down 5%. Everything's getting hammered. The banks are getting hammered. No, those are a lot of those banks are starting to hit levels they haven't hit since 2020. Now, in this sort of market, okay, what we're in, I want to explain this here in just a moment, but make sure you get some free stocks from Moo down there. That'll be pinned comment down there. Also, I'm going to have pinned comment down there. Stock Market Investing Mastery. That's a course I made free in this sort of market. I thought it was the right thing to do. Give you some knowledge. And I know there's a lot of people that are looking into stocks and starting to take stocks and investing serious. I think this is actually the market you want to take this serious. And when you're getting everything just obliterated, you want to take stuff serious. And once again, any deposit, get 3 free stocks from Moo. That's pretty amazing. So check out pinned comment and links in the description for that, okay? So this stage of the market we're in right now, let's call it the market crash. This is the 9th inning stage we're in right now, where everything's falling. Everything's falling. See, if we go back to a year ago, a little over a year ago, the first thing that started falling was the retail trader names, the meme stocks, and let's call it the super high valuation but lack of business models plays. Those started to fall in about January 2021 when they peaked out, right? A little over a year ago. And then they started to fall. After that, the next group to get hit was the companies that actually do have good business models and actually have incredible revenue growth, but are money losers and are expected to be money losers for years to go in the future, right? That was the next group to fall after that. Then after that, it was pretty much all small caps. It was all mid caps, right? Then it started being big tech left and right, PayPal's and the Metas and everything. And now we're in the ninth inning in this game where just everything's falling. It doesn't matter what you are, other than maybe energy. Everything's just getting absolutely devastated right now. It doesn't matter if you're Apple, if you're Microsoft, if you're Amazon, everything's getting hit now in this market. It's what I call the ninth inning, that last hurrah where we're just devastating everything. Everything's getting sold off. And now this can last for days, this can last for weeks, this can even last for a month or two, right? The only way you get into extra innings is really a scenario where you have like a massive recession like we had in 08, 09, something like that. That caused the market to fall for about a year and a half straight, roughly, in a real way. About a year and a half straight, the market just fell. So you can go into extra innings, but you have to have a massive, colossal global recession that is vicious, right? And unemployment goes sky high, and companies have mass layoffs, and you get in a scenario where the entire banking system, potentially collapses. That's how you go into extra innings, but that's not usually what happens, right? So when you're in this kind of last hurrah, you got to understand when you got the VIX spiking like this, you have to be out there buying. If you're not buying, it's like what market do you buy in? What market do you buy in if you're not buying in this sort of market? Because these are the sorts of markets that I love to be a buyer in, that I love to take advantage. When you have everything just getting absolutely obliterated, which is exactly what we have playing out here. We have the VIX at 35, and we're in that. I also call this a ninth inning because this is the last stage where everything's getting thrown at the market. And it's so bad that just people can't even fathom it. Investors can't even fathom it. Wall Street can't even fathom it, right? You have everything thrown at this. And this reminds me a lot of March of 2020 in terms of, the thought process behind it, right? Because right now, everybody's talking about oil's going to $200 plus. WW3 is going to start. Everybody's taking it to these extreme situations, right? Like, let's think as extreme as possible. Let's put it there. And in March of 2020, we went to that same thought process. It was just different, right? It's like, oh my gosh, we just got hit with a once in a 100-year pandemic. The thought process was the global economy is going to be closed for 3 years. That's what people were talking about. The global economy is going to be closed for 3 years, and we're going to lose 5 to 10% of the population. That was a thought process. Obviously, neither of those played out, but that's where the thought process actually went. And that's why the market fell the fastest it's ever fallen. It was like a 35% fall in the S&P 500 in a matter of like 22 trading days or something like that. It was like the fastest fall ever, right? And you get there by saying, yeah, we're going to lose 5 to 10% of the world's population. And we're going to close the economy for 3 years. That's how you get to that place, right? And so in this sort of market, it's having everything thrown at it, from inflation, from the Fed to, the Russia-Ukraine situation to, gas prices now, oil prices. And when you're in that sort of market, it's, you can't have much more thrown at it. That's the only good news. I mean, when you're already talking about WW3, like, there's nothing past that. And when they're already talking about the nukes, we're going to nuke. When everybody's talking about there's nothing worse than that, right? That's the bottom. So that's the only good news is we've already reached that moment of the market where everybody's, planning on these just crazy things that if they do happen, it's like the end of the world, right? But if it's not the end of the world, then we're okay, right? So I hope you guys enjoyed this video. As always, much love. Make sure to subscribe to the channel. I'm going to try to keep you guys up to date on all this stuff and all the stuff coming out, which is a lot. And make sure you take advantage of that free course I made free for you guys right now. That is going to be pinned comment down there. And also get your free stocks from Moo. That's like getting free money. Any deposit, you get 3 free stocks. That's pretty sick. Much love and have a great day.